Alternatives continue to dominate the headlines, but why do they ultimately matter? To break it down for us, I'm joined by Dennis McCabe of Morgan Stanley to learn more. Dennis, thanks so much for joining me.
Thanks for having me here.
Absolutely. So alternatives, incredibly hot topic in our industry. They continue to be, but why are alternative investments important?
Alternatives are important for a whole host of reasons, right? And they're gaining broader adoption for a lot of reasons, right? But let's just key on one that I think is particularly compelling, and it's that they dramatically increase the opportunity set, right? So there's roughly 730,000 companies in the US today, and 4,000 of them are publicly traded companies. And I'm not suggesting that the other 726,000 are, but the reality is that there are roughly 400,000 private markets opportunities, right? So if you're able to step outside of public markets and enter alts and private markets, you can increase your opportunity set by 70, 75 times. And it's really hard to argue against those numbers.
It certainly is. And then in a similar vein, though, what are the long-term implications of adding alternatives strategies ultimately to a diversified portfolio?
So it's a great question. I think it really is about giving you optionality and agency to do two things, right? To really enhance returns as well as manage the downside in terms of risk management, right? And so if you're able to take your public portfolio and move a portion of that into alternatives or private markets and move from daily liquidity to quarterly liquidity, or maybe even push out your duration a couple of years, you're now able to command and collect an illiquidity premium. So you're introducing a tool to give you excess return that you just didn't have. And then if you think about sort of periods of stress in public markets, and if you're able to introduce non-correlated strategies, not only non-correlated to public markets, but non-correlated to themselves, right? You're not going to feel some of those impacts when public markets are in periods of stress, and your portfolio is going to operate much more as a contractual return stream.
So how can folks then learn more about alternatives and implement them into portfolios?
It's a great question. It's literally the number one, sort of feedback topic that we get is, how do we learn more, right? It's a little less opaque or a little more opaque. And so we did launch the Morgan Stanley Investment Management Alternatives Investing Center about a month ago. And the response was overwhelming, right? We had literally 1,000 people sign up for our first webinar. And this is just an education portal that we launched where investors of all types can come and get some introductory content, maybe a little bit further in your journey, and you can get some more dense sort of proprietary research and asset allocation frameworks in the private market space. And so, this is a way you can learn, and MSIM has a team that's happy to engage on this topic. We manage roughly $250 billion in alternatives, and that didn't happen overnight, right? We first started investing in alternatives back in 1985. So we've literally got decades of experience and happy to engage with folks.
Well, appreciate the information, Dennis. Always insightful conversation. Thank you.
Thank you.
For wealthmanagement.com, I'm Shannon Rosic.